Well, hello, folks. Long time no see. Top Gun here with you, and I got a good one for you tonight. I thought with everything going on in the markets that maybe I should touch base with everyone, see how you're doing, and do some of my patented market chart analysis, kind of showing you what I think is up with the markets. I am not a financial advisor. This is for entertainment purposes. However, I do have a funny knack of being able to spot the bottoms, of course, calling the tops. That's what I'm trying to see if I can do this time around. So we've had a lot going on in the news. A lot. I think BlackRock is partnering with Coinbase now. That's kind of weird. Um, so much for decentralization. Solana, oh my god, the wallet hack, 8,000 just. And it only cross chained to other wallets if they had used that seed because it, for once, wasn't entirely Solana's fault. I mean, it's crap code and the products around it are kind of crap. So, one of the crap products around it, in my opinion, the wallet, yeah, they had exported the seed phrases and backed them up basically and shared with a third party, and that got access from my understanding. So yeah, that software was not written as well as you'd hope. Again, reinforcement for hardware wallets. I have talked about their importance, however, I haven't done a video on one. There are many people that do some good videos, good content. Hardware wallets are very important. There is Trezor and there is Ledger. They are relatively for protecting your assets, not that expensive. The idea of a hardware wallet, why it's so important, is you can literally think like a physical key. So they always tell you, don't lose your seed phrase. Not your keys, not your crypto. Don't leave it on exchange. And be careful with your seed phrase. Be so careful with it. And the thing is, if you type it in and use it in a program, there's batch files, there's little redundant traces sometimes. Sometimes there's keystroke loggers. There's other software. I've done some episodes on security. So by not having to type in your seed and having it stored on a little thumb drive that you plug in and hook up, it keeps it as a cold wallet. That seed phrase is never out there to be shared with any third party sources. See how that works? So, yeah, hardware wallet would have saved the Solana based wallets that were involved in this hack. Joy, oh joy. China is hitting some massive numbers as the market continues to crash for the third consecutive year. China would be officially in a depression as their housing market has collapsed and there has been runs on the bank and tanks released. Standard stuff for China. It's fun over there with the CPP. Not. So anyway, we'll enjoy what little freedoms we have left over here. Although Nancy Pelosi, bless our overlords, as she made it home safely on her broom after witching her way over to Taiwan to give the middle finger to China. Because, stock tips are more important than, pissing China off into watching, weapons of mass destruction. So, yeah, we live in a bit of a fun world right now. There is chaos everywhere. And I have put out on Twitter, you should be following me on Twitter. It might be Top Gun Hexadian at Twitter. Because I haven't had a lot of time with work to do the YouTube videos. But I stay active on Twitter, putting all this information out there. Not all, well, I mean the news stuff. If I catch the news or I busted the Biden administration, gotta love that censorship of the authoritarian regime kicking in. How long till it's like, I should be careful what I say. I don't want to lose my channel, but I will say it was funny how Wikipedia and Google changed their definitions of a recession over the weekend. So, yeah, that was a little bit insane as they started putting out the editing and denial that 2 quarters of negative GDP growth, gross domestic product, being made and exported, that if it's not going up and it's zero, it's stagnant level. That just means we made the same amount as we made last year or last quarter. And so when it goes negative, that means we're making less and less because the economy is shrinking. So a lot of people are so excited right now with this mania that this means, well, then inflation's coming down and the Fed's gonna pivot. So we have a market rally which is being exacerbated, and I have some theories on this rally I thought I should share with actual charts. So we're going to walk through and have a look at some of the charts that I keep an eye on to kind of examine this rally and what is going on with it and why I did a face plant because of how fast and hard it's trading. It's in a mania how quickly it's bouncing up. And the fundamentals have not changed because inflation is not really coming down yet. The layoffs are continuing. The earning reports are still coming in negative. And people are so mania that they think the bad news is good news thing is still continuous. So they're trading into it. I mean, I forget what was pretty much declared. So many businesses struggling, declaring worst news ever, downturned everything, layoffs, and then boom, the stock shot right up 16% for no good reason. Everything about the report said don't buy, but everyone's like so confused. Bad news is good news, right? So let's try and actually understand what's happening. The basics, if you haven't caught earlier episodes and you don't know my stance, Mr. Jerome Powell, since the housing crisis of 2008, turned the Fed into the money printer. So they went above their normal inflation rate. And they bought up a bunch of assets to prop up the stock market. MBS, mortgage-backed securities, the bomb that blew 2008, well, along with CDOs and synthetic CDOs. You got to watch The Big Short. I'm not going to do a whole thing on that. They explain that nicely as far as I'm concerned. Any questions about it after viewing that movie, I will definitely try to answer them. But basically, the Fed has just gone nuts printing money. And inflation is never ever a supply chain issue or anything else. It's always a monetary phenomenon. So during the Civil War, when the South fought the North in the U.S., the South went to an inflationary system and printed money, and they experienced hyperinflation. Everyone was going poor, wreckingly fast, couldn't afford anything. The actual money printer itself broke for 2 weeks. Funny enough, 2 weeks later, inflation started coming down. Within the 2 weeks, inflation had already started as soon as they couldn't print money. So the Fed just has to enter zeros on a computer. There is no breaking for the machine. So for 10 years, they printed, and they printed, and they printed. And then the thing happened, and we all got locked in our homes, and we thought Peloton was a great success. I didn't. I passed glued to bicycles. Anyway, so yeah, they went and turned the printer on. Super bazooka levels. A tsunami of liquidity that I'd never seen before, which went out in stimulus checks and propping up the stock market and keeping the economy flowing with less people actually out and participating in it during all the stay in your home and cuddle times. So with that, we have inflation getting out of control all the way back at the beginning or the end of last year. And that's when you got all the billionaires that cashed out, the oligarchy, knowing what's coming, cashed out, and then left investors with the bag. And the market has been falling since. And there's this mania that it's all going to go back to the way it was when you have this large inflation here. So we've talked about the fiat, like any inflationary money system, generally lasts 150 years or less because of the way it expands its money supply. You know, if I have $20 million, you have $20 million, the guy in the gutter has $20 million, everyone's got that amount of money. Loaves of bread, probably going to be $5 million. 10,000 yen gets you a cup of coffee with Japan's inflation at some points in history that I remember. So hyperinflation currently happening to Argentina. Meanwhile, next door in Uruguay, where they were a little more responsible and a little more segregated, they're experiencing inflation, but not the same hyperinflation. While Argentina's got 60%, not counting all the extra stuff, probably 60% inflation, probably not including gas and rent or oxygen, just things you need. Core inflation, what a scam, the CPI. All right, so I've ranted about that for a good while. You're getting my stance on this. The corruption in the Fed prints all this money for the Rothschilds, the DuPonts, like all the oligarchy. There are these families. I'm not trying to talk about conspiracies. It's just people are rich. They have the money. They make the decisions. I'm not saying there's a grand plan or grand conspiracy, but you can never go wrong betting on stupidity and greed. And so you have rich people making the rules that are still greedy and stupid, like Nancy Pelosi's husband, who basically got busted publicly for insider trading because everyone called it when he bought all Nvidia stock, I think it was, or Intel. Either way, just before the Chip Act got announced, so he had to go sell it. They had to sell it at a loss. Oh, you see Nancy Pelosi's worth and then how much she makes and figure out how much they shark the system. So, yeah, you've got all sorts of chaos that goes on, stupidity and greed that manipulates. So the Fed goes, and the Biden administration is just putting the blinders on, going, we can pretend it's not here. No, you can't. You're going to lose this election. Whatever. I'm not trying to get political on this channel because inflation is not the fault of the parliament. Now, the way the administration decides to spend or the policies it enacts with sanctions against certain other countries may speed up Zed inflation, may make it more noticeable more quickly. They can maybe adjust the rate, slow it down, or speed it up with their actions, but they don't actually control it. The Fed does with hiking the rates. So I've ranted enough about this. Let's look at some charts, right? You folks won't come here for the charts. Oh, wrong screen. There we go. So taking a look right off, you know that I love the hex. Love the hex. Right now, I saw a one hell of a hard bottom hitting hex right here, back here in June, while Ethereum and Bitcoin crashed lower. For me, that was another in a long line of bottoms. Time to pick up and buy. So the problem with the fundamentals. So let's have a look here. I'll clean up some charts and go through some things here. So I always keep an eye on oil as my inflation metric. So I will zoom out on oil so you can see this a little more clearly. All right. So I had marked what I perceived as the bull trend going upward as the line of support. And I knew that oil prices were exacerbated, as in the crash, as people demand dropping in oil because people are going poor, they're getting laid off, they don't need to drive. There are signs where let's go ahead and let's take a look at the weekly. All right, so now we're looking at years. This will give you a better idea when we start to zoom back in history. You see this where I've got a bull trend going up and then it breaks and then suddenly drops. You notice this is 2008, 2009, the housing recession. Basically an inflated bubbled market. So again, long run up in oil. And here we had the long run up in oil. And when it finally crashed, it started dropping. Now I zoom in on this and you'll see some market rallies. It's not just a straight line down like it looks. Like right now, it looks like a pretty straight down line when it's that squished. But if we zoom in, you'll see market rallies. Now the past does not repeat itself, but it does rhyme. There are usually similarities that you could track. So we can see where the bottom fell out, we had resistance, that maybe there was hope, and then wham. This kind of led the problems in the economy to say, oh no, it's on fire. And so the recession started 2 quarters, and then pain really hit at the end of, oh look, so we had 1, 2, 3 comebacks in that massively. So skip ahead in time to, again, the same huge run up. And so far, 1, 2, we're due for a third, and then a bottom out if there's a rhyme in history. This is the pace where things are going to get worse. So let's again have a historical look. All right. We're going to take a look at the NASDAQ. As a tech stock, especially, we're going to go all the way back to the dot-com boom. We're going to have fun with this. We're going to do 20 years. All right, so there you can see the zero line pop up. The chart hits its bottom. So here, at the top of the dot-com boom, the NASDAQ, a collection of the 100 best top tech stocks, speculation chart was at $4,800. By the time it finally bottomed out and shook all the pain out, it was down to $821. 4,800, that's divided by 6. That's a drop of 83%. The first crypto drop. Web 1.0, the dot-com boom. Now, moving along, it looks so little here in comparison to the dot-com boom. But in the tech stocks, we still see it where it wasn't the tech stocks' fault. So in here, we had a peak of, what was this, 2,200? And then we had a bottom of about 1,000. So that means we had a 60% drop off. It was a little more than half. It wasn't so scary as the one before, but that settled out the recession, at least a 50% drop. And 1,660, so 8,000 would be a 50% drop. So until we've shaken down to here, we haven't even hit a hope of shaking out inflation and getting the market back in a condition where the Fed can ease. And that will not happen as quickly as everyone is trading like it will. This is going to be something that takes months and months, and I dare say, not till next year they might not turn around and really turn the printer back on. This is going to be a conservation time, because now that I zoom this chart out, let's have a look at the bottom of this NASDAQ. Oh, that's July of 23. And the soonest, if it drops hard, that's November. Sometime between November and July by this current downtrend. If it continues, and everyone's arguing, but look at this rebound, we're going to an all-new time high. Oh my God. But anyways, the trend is your friend until the end. But the trend does change. How do you tell when is the end of the trend? Well, the fundamentals in the market that dictated the crash in the stock market starting, the 2 quarters of negative growth that are going to continue, well, then the trend is likely to continue. And what happened here? Back in April, we started having a sharp downturn, and the trend is your friend until the end. And I called this bottom in hex, like I said earlier, because I knew when it bounced off both of these support lines that it was likely to go to the top side of the trend. And for poor Michael Burr, who shorted right about here around 140 in the Apple stock, and I said, oh no, not yet. Why? Because even though it had this large downsending trend, the wider trend told me there was going to be a rally. I knew he did it too soon, and there was a rally. And I was like, oh no, you didn't go too soon again. And then it crashed down. I'm like, oh, maybe he learned from his last mistake and he knows how to time things better, and he won't get into the market a year and a half before and short the market before it crashes. And then, ouch, kabibble. See, I knew there'd be a rebound. I didn't actually know it would get to the top side of this trend almost, but this is basically where I believe, even if the insanity brought it all the way up here, that's the dead man's land where it will kiss it but not have the steam to get over it, and it will bull flag and drop. But up here above 167 is where I would short. We peaked over that today. Because fundamentally, the spending's still dropping. The Apple has a lot of buying power. So, I mean, there's still room for it to go up a little bit, but the trend's your friend till the end. And Apple will not be completely immune. And, Tesla. So, I mean, this earlier line is no longer needed in these charts. Bam. But this old line of resistance is now a line of support going on. It shouldn't sink down any faster than that line as it did from the last line. See, this old line of resistance became the line of support. It's funny how that works when you know you're in a bull market. You're not fooled by anybody because you understand the fundamentals. So there will be market rallies, but fundamentally, we're going down. So when we look at the SPX, we still got plenty of room in this rally. There is still room before we cap out and basically have to lose steam. The RSI is trading up into oversold conditions. We're starting to get green impressions on the MACD. This would indicate that throughout next week, the SPX still might clear more lines of resistance and find support at 41.72. And it may trade up in this channel. May even get up above that with this mania, which is crazy. But then she's coming crashing down, in my opinion. I really don't think she has the steam. And when I look at all these charts, they don't, as you can see, the ROIs aren't perfectly all the same together, as the NASDAQ is the first one that will be approaching this line of resistance. Now, with all this risk on, we've had some beautiful action in crypto. With all the NASDAQ just being a pulse of the tech stocks and crypto together are risk on. And funny enough, crypto kind of kicked on the risk on mode for tech stocks. It's funny how the markets are feeding off each other right now, looking for each other for direction because they're so confused. When we look at the Bitcoin chart, much like the NASDAQ, there's still room, but it seems to be losing a little bit of steam right now. Could be just doing a pullback. So again, this trend, we can clean up this chart, goodbye. And this old faded one, it hasn't really paid a lot of respect to that line, so I don't think we're going to use it, goodbye. And that kind of cleans up the picture. This red zone, oh, look at that, 10,200 to 4,000. This is where I believe Bitcoin is heading. Not necessarily today, not necessarily tomorrow, but maybe by December. So we'll see if it does get the steam to break out of this trend. Because, I mean, even with all this market pain, you get market rallies, and it could set a new line of resistance, but this is rather steep, and I don't believe we have any fundamentals that warrant going to an all-time new high. When people are going so broke because they can't afford eggs or bread, it's hard to squirrel away money in crypto when you're being threatened for being evicted because you can't afford your rent. It's not quite kind of the world where you get the mom and pops in, and so there's still the rich people that can invest in crypto, but they usually like to take advantage of the moms and pops, and if the mom and pops aren't participating, well, they're most likely just going to hold their assets where they are, in my opinion. So, funny enough, looking at Bitcoin and Ethereum, even though they've been making slightly different trends, capping out as they've been trying to decide, they've decorrelated in the last week, over last weekend, as they're trying to make sense of the market rally, and everyone else is too. But funny enough, in all of this, BNB, when we started breaking out, broke out of a long time resistance, which we've already gone past in time, so that's garbage anyway. It broke out, and it's really screaming risk on as we're starting to make green impressions on the MACD. So, I mean, there's possibly room for even more of a summer rally than I'm expecting, because I am a bit of a bear and a bit of a pessimist knowing the economic conditions, but there is a mania, an ignorance, a willful. Jim Cramer must be in control of the markets. Buy, sell, sell, sell. Oh my God, I can't stand Cramer. As you can tell, I've been trying to do my research and get around and actually figure out what's going on for you folks. So basically, yeah, you've got the Fed, who has gone into quantitative tightening, which means they've started raising interest rates, slowed down in the printing of money, not necessarily stopped because they haven't even offloaded the balance sheets. They tried, but nobody wanted to buy it. They said, it's not worth that, give it for a lower price. Well, we can't. Yeah, they inflated the price so high that it's not worth it, and everyone knows it, and we're in a depression. No one's buying it, so they can't offload the balance sheets. So it's kind of in a rock and a hard place trying to tamp inflation. Really, they need to just offload the balance sheet and cause a lot of pain in the market right away. Rip the band-aid off. The more time they take doing this, the harder it will be to pull back out. We risk stagflation, inflation sticking around, because the Fed has no credibility, because nobody believes they're going to raise interest rates enough. And right now, we're heading into a standard bull market in crypto, a lot of people would say, but the whole cycles of crypto have pretty much been during an inflationary system where the money printer has been almost nonstop on. And funny enough, when we look at dips in the NASDAQ, go back and look since 2008, there's not a whole lot of a lineup for the what crash 2014, which I wasn't around for, but there is a lineup in the market for the crash 2018. You know, with the thing starting and all that. So there's a little bit more and more correlation than people like to think between how people spend their money, because people earn their money from the traditional market and then choose to move it to crypto generally. So yeah, crypto right now is basically trading like tech stocks. Risk on at the same time, risk off at the same time. And a lot of them are getting tugged around together. Their charts are looking very similar, although the ROIs might be slightly off when I'm looking at this larger scale. So in this is the time for bear markets where the little gems take hold. So Hex hit less than 5 cents a coin. It's so dirt cheap. Yeah, there's a few 100,000 users now, but not millions. Still early in adoption, and it's going to be reinforced with Pulse Chain. Yep, Pulse Chain. It's not a very impressive come up, but pretty much I think like you look at how flat that got with those Judas wicks. Bottom. We will go no further. And I'm starting to think that that's a good tradable bottom. We'll see when the market comes out of its rally mania where Hex holds, but overall, it's a good product with low, regularly maintainable inflation, because there are more people every year. Inflation kind of makes some amount of sense, but the Fed has been printing more money than people are having people. So you get an imbalance. Um, yeah, Hex is actually a really well designed DeFi. I won't normally talk nice about DeFis because usually they're very gimmicky with too high a yield to take advantage of the next investors. This is set up to be a better version of Bitcoin. So you want to call Hex a scam, you better call Bitcoin an even crappier scam. Oh, you don't want to say that about Bitcoin, then realize this is Bitcoin, but instead of running on its own network, it runs on Ethereum, so it doesn't burn up extra electricity just to run the network. It's more economically efficient. It has better stable code. It's easier to work with, and it's faster, and it's reliable. It's better Bitcoin. So on its own, it might even be a hard narrative, but wow, what a community behind it. It's a really large community that drew me in and got me into crypto. And then you add in the fact that, wow, the gatekeeping that suppressed Hex and how well it did, even with all that gatekeeping, because you probably never found it on CoinMarketCap because it was buried at 200. Now it's in the top 10. Oh, fancy that. The gatekeeping's finally stopping as we're heading into a recession, but this is a good product, and because of all the gatekeeping, the creator got really upset. If you haven't heard me mention Pulse Chain, that's coming. I'm finally happy, that the devs are split into two teams working on the solutions, battle testing the current one and trying to work on a new one, and whichever one's done first goes to market. It makes me feel a little more optimistic that it still might come before the end of this year. Pulse for Christmas would be nice. So with all that, Hex has a bit of a future because when Pulse launches, I'm expecting it to be a green wick and a sea of red. And then everyone knows that, yep, I am not actually a part of the project. I do not get paid, but I do love the cut of KG's jib, and I have put money into this project. I do believe in it. It's a small little gem. It has one of the healthiest, sexiest charts I have seen. Look at this thing. Look at this thing. That's just a sexy chart. Sexy, sexy chart. There was a fat finger trade day one when they were setting up liquidity, which messed up the price for all time and really messed up the MACD. So you gotta go from the peak down to see what it's doing. But why I really love this gem is you can see the low liquidity. Low liquidity. This means you're at the very beginning of a project. Only 23,000 in liquidity. That means to 4x the price, you only need to double that. Well, how many people have bought this so far? Ooh, that went up from earlier. It was 894, 895. Just shy of 1,000 people. Hell, just shy of 900 know about this little gem and are buying in. Yes, it's on BSC chain. No, it won't always be on BSC chain because however much you buy, just like Hex, the creators of IM are doing a free airdrop on Pulse. So buying it now gets you a copy on Pulse, where it'll be one of the most liquid assets. And then it'll be attached, potentially no expectation of the work of others, into a dual class token system. Yeah, it's like, why do you need two tokens? It sounds a little complicated, but basically, in the stock market, you get dividends and buybacks occasionally, if you're lucky. Well, one token pays dividends, and the other gets buybacks. No expectation of the work of others. So the dividend one, some of the revenue on the dividend one, because all the revenue goes to the dividend token. The owners are just keeping some of the token to keep some of the revenue. And some of that is going to get used for the buybacks. So the holders of the WD token, like me, will get dividends straight off the top of the cut of the revenue that the wallet generates. And the holders of In-Or-Out money will get to see asset appreciation through asset buybacks. And then I know they could sell it later on your head, unless they're crazy and burn it, maybe. So I have some high hopes for this project. I really do. I'm glad to be early in. It's a beautiful little gem, and it's funny. Like the last bear market, Hex dropped. Like this just dropped at the beginning of the bear market. And when you look at what Hex did from its beginning, and you look at it properly on a logarithmic chart, now yes, it's been a recent ouchie, but overall, it was down here. And then, it is up here. Wait, that's not the beginning of the chart. That's nowhere near old enough for the Hex chart. I have to go to a different chart to see back in the age. But anyways, this logarithmic thing just goes down and down and down in the proper full-length chart. Like, Hex, even though it's dipped down, is way above where it started. And it started, something like 1,000 days ago now, right in the middle of the bear market. And it was small, and there wasn't many holders, and it did wonderfully. Whoa. And it didn't have a wallet generating revenue to actually go into participating in asset price, potentially. No expectation of work of others. So, in this kind of market, there are the staples that you can try and bet on, such as Lockheed Martin, because defense spending will always happen, even in a recession. And there are certain things like General Mills that should be somewhat recession resistant. Staple food products that you just can't get away with, putting a no-name brand in front of your kids. So there are some performers in this kind of market, and there may even be a potential generally when the dollar finally starts to really crash, when it gives out its uptrend. We could look at some past performance in the dollar over the years, see if there's any indicators there. It's kind of interesting how it just keeps going up and up, even though it's inflationary. Get back in time, we start to see. Oops. Yeah, not as much to look at for a similar pattern. I don't know. Unless this was it, the run up and then the crash. Oh, yeah. Oh, yeah. So we're likely to see a bit of a crash in the dollar finally as the recession kicks in. Looking back to 2008, always see the dollar run up and run up and run up. Why would it run up with inflation? If we got so much inflation, why is the dollar worth so much? Well, the engineering of the world banking system means that other countries inflate even faster and have to buy American dollars to participate in markets to buy stocks and futures and steel and gold and metals. The US dollar is the world dollar, and because of that, even in inflation, it travels up, but it will get a spanking and a smacking. It will, just not today. So I've been keeping an eye to see when that's going to break and we're going to see the pain. We'll see. I don't know when we'll see it exactly, but the Fed, yeah, I'm trying to learn. I'll come at you with some more when I have it. But when the dollar starts coming down, that is when you'll see more of a recovery in gold. Oh, wait, look at this. A little shoot up in gold. And then, oh, what was this? A little dip in the dollar. Funny how that inverse relation exists. Yeah, funny, ha ha. Even with J.P. Morgan, the crime ring desk manipulating gold prices. So there are always those little hedges. There's nothing wrong with owning a little bit of gold and silver in a recession. It is not going to be your money maker, but even Richard Hart and Peter had both agreed that it'll store value. Of course, Richard was very intent that Hex will store it better. um, but hey, everyone's looking at different options, different belief, and with all the bad news in crypto, I see that people will be looking to other areas, and I look for other areas as guidance as what might happen in crypto next. One of the biggest speculations since the dot-com boom. So hopefully we don't see as much pain as I worry we might see, and those market pain will end soon enough. And the fact that I'm thinking in a long term, months and years instead of days and weeks trading. So most traders are just probably going, Yeek, what? No, you're such a bear. I'm done with your channel. Well, if you're still here, hit like and subscribe. Thanks for sticking around. I hope this has given you a little bit of information on what I'm thinking. So, yeah, right now I'm basically looking at the NASDAQ and the SPX, wondering which one is right about their downtrend. Is the NASDAQ calling it? And are we going to run out of steam when the NASDAQ bounces off this line? Because it's happening very soon. Or is the SPX dictating the rally, the 500 index of the top companies, not just tech stocks? If that's the case, there's more room in the rally before it fodders out and fizzles. But I have a funny feeling that crypto and tech are leading the rally. Now, even with the NASDAQ trading up like that, will it be NASDAQ or will it be Apple that taps out the top? Who will actually call the top line of resistance and fizzle out and start our steamroll down? I wonder. But we are not going to the moon or to all-time highs. The Fed is not about to pivot, so this is a massive bull trap. Massive bull trap. And the rug is going to fall out suddenly. So I am keeping an eye on these various charts to tell exactly when it's going to drop. And I am going to be looking for a possible crossover for diminishing green impressions or red impressions beginning on the MACD. I'm going to be looking for highly overbought conditions. So when I see highly overbought and the MACD starting to dip and the RSI starting to come down, that is probably when we are going to see a big leg down. But the RSI can stay overbought for a while. Look, June 20th to, 8th of June to 17th of August. That's a pretty long time to remain overbought conditions. Sorry, bottom's oversold. I doubt we'll stay up there that long, but the idea is, I mean, we could get to the middle of August. That's not really that much longer in the term of weeks. If Apple is setting the trend, if the SPX is setting the trend, but if the Nasdaq's trend is our friend till the end, we're going to see that drop at the beginning of next week as the rally starts to lose steam. We'll see if it respects this line, tests this line, or jumps over this line. That's what it really comes down to and matters, folks. Look at how gutsy it is right up at that line. And I assume that between this blue line and this green line will be the play out of the bull flag in the NASDAQ as the rest of the rally starts to lose steam, and then we'll see it start dropping. This is my fundamental hunch in the market because I've been trying to call a top that not quite there yet. We'll see what trading does tomorrow, but I have a funny feeling it's a next week or week after trap. We'll see, though. This is so close by the daily. I mean, tomorrow it only has to go up 1% to get over this line. So, I mean, we traded 0.5% today. It was 2.7% the day before. It's not very far to this line. It really isn't. 13.4 or 13.311. That's less. That's maybe 0.6%. So, yeah. Very, very close. Very, very tense. I'm excited to see what's going to happen. I wish I had the money to open up some puts or shorts. I really do wish I had the ability to take advantage of this. Because I am calling their bluff. The mania cannot last. The money will run out. The trap will close. That's my opinion for entertainment purposes. Again, not a financial advisor. Thanks for staying tuned for such a long time while I offload a little bit and talk to you guys. Hope you enjoyed this one, and until next time, stay frosty.